Yo guys, welcome to the new video. In this video, I will show you about the quarterly theory, which is very important topic to understand the importance of the time and price. Because many of the smart money people and retail people will think the price is very important. But if you see on the chart, we have two axes. One is x-axis and another one is y-axis. The x-axis represent the time and the y-axis represent the price. So many people are only creating their edge according to the price, but nobody is creating the edge according to the time. So if we can create the edge according to the time plus according to the price, we can become the very good trader. So this quarterly theory is based on the time to identify the very high probable zones, and in this video I will explain you how ICT came with the kill zones, why they are kill zones, why we should not trade any other time than kill zones. So watch this video till the end, then you can exactly understand what is the quarterly theory. So the basic principle of the quarterly theory is every time segment is divided into four parts, whether it is a daily cycle or yearly cycle or monthly cycle or quarter. Everything is divided into four quarters because simply, for example, let's say this is the bullish candle. To bullish candle to form, there should occur four phases. One is it should open and it should create the low of the day, and it should create the high of the day, and it should create the low of the day. These are the four things that should occur. The four things should occur. There should occur four phases. One is accumulation of the liquidity, sweep of the liquidity. Then the real move will happen. At any candle, even the 1 second candle to the 1 month candle or 1 year candle, same thing happens in the lower time frames. If you see the let's say 1 year candle is like this, the monthly candle will be like this: accumulation, sweep, distribution, and then retracement, and the candle closes. Every if let's say if this is the 5 minute candle, then the 1 minute candles will be like this. Everything is works in quarters because we should understand which is highest probable time to execute. So there are four sessions. If you clearly observe, there are four sessions in a day, and there are four in each and every session. There are four 90-minute cycles. Let's say in this Asian session we got four 90-minute cycle, and in the London session we got four 90-minute cycle, and NY session and as PM session. And also we got four trading days in a week because Friday is not a trading day. It's just a retracement of the before day. And also we have 4 weeks in a month, and also we have 4 quarters in a year. Everything is moves in a cycles. So I will show you in the chart how ICT came with the idea of kill zones. If you clearly observe, see here, if you clearly observe ICT, this is the midnight open. The first cycle starts from 18 to midnight. This is the very first cycle. If you see, the first cycle is always accumulation of the orders. First cycle is the quarter one is always accumulation of the orders, and the quarter two is manipulation of the orders, and the Q3 is distribution, and the Q4 is reversal or the retracement and continuation. So if you see, this is the Q1. Q1 is what I told you. This is the liquidity buildup. I mean accumulation. If you see here, this is the accumulation phase, this is the Q1 phase, and the Q2 phase is the sweep. The sweep is the Q2 phase. Then this creates the low of the candle. Low of the candle creates by this. This is the open, this is the open, and this is the low of the candle, and this is the expansion distribution which will be happening most of the times in Q3, and this is the close. We should only enter the price in Q3 because that's the kill zone. That's what ICT gave us. If you clearly observe, this is the build-up, right? This is the Q1 and this is the build-up. Quarter 1 and this is the quarter 2, 0 to 6, right? Yeah. If you observe clearly in the Q2, we got into the manipulation phase. If you can see the huge manipulation push that took the previous day's liquidity, it's just because we are in Q2. The moves will be so aggressive like this. And after the Q2, what I told you, there is a clear distribution phase in the marketplace that distributes the orders. So we know we should enter at the Q3 and follow the distribution. From 6, the Q3 starts and it ends at 12. See here, if you can clearly follow the order flow of the market, you can take a buy here. To be safe, your stop losses can be used to safe. Target this imbalance. This is how you can trade the markets with the time and price theory. Your accuracy will be 90 to 95% because we are using both the high probability price zones and with the high probability time zones. This is the very important topic. Every day it happens. If you see here, same thing happens. Building up of orders accumulation. At the second quarter, it got sweep, then distribution. Same cycle happens over and over and again. If you see this day, accumulation, manipulation, sweep, and then the price continues because of the high time frame cycle. The same thing happens over and over and again. The time and price is very important. I can show you number of examples of this. If you see here, this day, let me mark the first zone. 18 to midnight is the quarter 1. It means accumulation. The quarter 2 starts here. If you clearly observe, in the quarter 2 also, there are 2 quarters. In the quarter 2 also, there are 2 quarters. This is Q1 again, Q2, Q3, Q4. Same cycle applies all over again. The Q1 is accumulation. If you clearly observe, in the mini micro 90-minute cycle also, this is the 90-minute cycle because it has 90 minutes, 0, 0 to this timing. See, if you can see, this is the sweep. After the sweep, what happened? The price has reversed. This is the very important thing. And where we should enter? We should enter at the Q3 of the session. Q3 means, if you can use the scale, it is exactly at the 3 to 430. It's where the ICT kill zone is. So that's why ICT has given the kill zones, because using the same strategy, ICT given the kill zones. We should always execute the orders in the Q3. That's where the high probability moves will come. At any given day, the high probability moves will come from, if you are trading the London session, always the high probability moves will come from here 3 to 430. Always the high probability moves come from 3 to 430. 1.5 hour zone, you can get very high probable moves. If you see here, everything has 90 minutes. This has 90 minutes. This has 90 minutes. Right? If you use again the 90-minute liquidity cycles, these stuff will go crazy because the time is fractal. You can use the same cycles in the seconds time frame too. Use 90-minute cycle again here. If you can clearly observe, this is the accumulation phase. Q1 is accumulation, Q2 is manipulation, Q3 again came and mitigated the manipulation zone and it went up because the cycle is always same. That's why if you see exactly, the Q3 manipulated the Q2 low and reversed. Imbalance came. This imbalance indicates the price. The price is about to change the delivery and we can enter here. Same thing happens over and over and again. So exactly we can enter here. At the 4-7 we can enter the buys and target the next liquidity. This is the very high probability move. We should enter at this time zones from 3 to 430. If we enter, it is the very highest probable liquidity cycles. So if you see, the same thing happens over and over. If you see this 90-minute liquidity cycle, accumulation, if you see, this is the accumulation, sweep, and the price reverse. Same thing happen over and over and again, even in the many liquidity cycles. You can try you as many you want, from 6 to 12, let's say. The price is not random at all. The code is broken. See here, if you see Q1, what I told you, Q1 is always for the accumulation, right? Q1 is always for the accumulation, and Q2 manipulation. This is the manipulation move, and the Q3, what I told you, this is the continuation of the move, continuation. So you can be in the cells here, because this is the order flow. Simply you can follow the order flow and target the nearest liquidity. What is the nearest liquidity? This is the nearest liquidity. This is how you can trade the markets from the time segment and the price segment. This type of trading is very high probable if you can understand the real context behind the charts. If you can understand, because this is the Q3 kill zone, order flow, entry. If you see here, after exactly the liquidity has been taken out, you can see the speed and aggression. This indicates the algorithm is behind the moves. After this is the breaker block, entry, boom, the price has reversed. Every fucking day this shit happens. Every fucking day. If you see here, this is the Asia session. Let's start the liquidity cycle. This is the Q1 first quarter of the day. 18 to 24, right? Okay. The price is not random at all. It is rigged. Build up, liquidity purge. You can treat it as the break of the structure, and then you can trade. Simple thing that will happen over and over and over and again. Simple things. Q3 distributed the price. If you see, if you got it out, where should I enter the Q3, you can just use the breaker blocks. This is the breaker block you can use, or you can use simply this candle, because this is also breaker block. Then you can trade simply, because also these have imbalance too. This was the imbalance. You can trade off the imbalance again. Very high probability move and target this liquidity. This type of trading you can get if you understand the time context behind the charts. So if you want to learn deep dive about this time concepts and the price concepts currently I am working with, you can join my bootcamp completely focused on the quarterly theory and the price analysis of the ICT. Peace guys.